Hi again, it's Bree from Bree Beers and Associates. So when you are a business owner, there is a really good chance that you can qualify to take what's called the home office deduction. So today we are going to talk about what a home office deduction is, how you qualify to take it, and what it can mean monetarily to you as a taxpayer. So let's start by defining what a home office is. The IRS defines a home office as an area of your home used exclusively and regularly for your business. So let's dig into those terms exclusively and regularly. Exclusive means just that this area of your house is designated to just be used for your business. So this can be a spare bedroom that you use as a home office. It can be specifically a home office. It can be a section of a room. So for us, we have our basement, and about a quarter of it was our home office. So that is that is what we constituted as our home office. Okay, what it cannot be is your dining room table, where you really are supposed to be eating food, right? It's multi-used. It cannot be your couch. It cannot be your bedroom, all right? It has to be a space in your house used exclusively for your business. The second part of the definition is regularly. It has to be a space used regularly for your business. Now, I know for a lot of people out there, you're like, I'm a photographer. I do my stuff out in the world, or I am a on-site bookkeeper. I go to my clients' houses and places of business to do their bookkeeping, right? So while we recognize that you may travel to different places, there's still somewhere that you call your home, for your home base for running your business. For me, it's my office. Like, away from my house, it's obviously my office. No matter how much I may go to clients' businesses or their places of work, this is my office. So for you, what is that place? Okay, so even though you may do the majority of your work outside, the office, where is it that, what I like to ask is, where is it you wear your CEO hat? All right. So where is it that you're balancing your checkbook? Where is it that you're making plans and creating your schedule for the upcoming week? All right. That is your office. And if that is in your home, whatever part of the home that's in, that you regularly do those activities in, that's going to be what constitutes your home office. So what this really means, you guys, is if you're like me and you pay rent to rent out an office space, then you're not going to have a home office, all right? Because your home office, even if you have one, I have one, but that's not where I'm meant to do most of my work. I am meant to do most of my work here. So that's really what they mean when they say regularly, okay? As long as you don't have a place that you're paying rent to, okay, you can take that home office deduction. So now that we've defined where our home office is, right? We found our space that is exclusive and regularly used to conduct business. All right, now we have to figure out how big it is. All right, how much square footage does this home office constitute? All right, so if it's a spare bedroom that you use only for your office, that's easy, right? If it's a 10 by 10 room, that's 100 square feet. Okay, if it's half of your basement and your basement is 300 square feet, then your home office is 150 square feet. All right, whatever it is. And it's important, you guys, because there are two methods to calculating your home office deduction, but either way, you have to know how big your home office is. All right, so you have to have that magic number of the square footage of your home office in order to take either one of the home office methods to deduct. Next, we're going to chat about these two different methods and how they differ and how we use each one to calculate our home office deduction. So we're going to start with the simplified method. All right, and the simplified method is going to take that square footage that we calculated of how big our home office is, okay, and it's going to multiply that by whatever prescribed rate the IRS has given us per square foot as a standard deduction. So right now that's $5. Okay, they're saying the IRS says that $5 per square foot of your home office space, like that is your deduction. So obviously numbers are way better than words, right? So if my home office is 100 square feet, okay, 100 square feet multiplied by that $5, which is again the rate for 2021, it was the rate for 2020. So 100 times $5, that's $500. So I get to take a $500 deduction for my home office using the standard rate. All right. There is a limit on the standard deduction of $1,500. So $1,500 is a 300 square foot home office space. So there is that limitation with the standard deduction. However, it is a lot easier to calculate and record than the actual home office deduction that we'll talk about in a minute, because there is no record keeping. You don't have to track all of your actual expenses. And the biggest one is that you don't have to depreciate your house. And we'll circle back around to that in just a second when we talk about actual expenses. So the second method for calculating your home office deduction is to use a prorated amount of your actual expenses. So that sounds really big and fancy, but what we're gonna do is break that into 2 steps, and that will really explain to you what this means, okay? Before we jump into that, know that with this actual expense deduction, it is a little more complicated to calculate, and it does require more record keeping than that standard home office deduction, which is why a lot of people end up taking the standard rate, because they don't want to track all their expenses, all right? But let's start with that 2 steps that we need to take in order to calculate our actual home office deduction. So our first step, you guys, is to calculate what percentage of our house is our home office. Okay, that was terrible English, but that's why I'm teaching accounting and not English, okay? So let's say our whole house is 1,000 square feet. All right, and we have calculated that our home office is 100 square feet. Okay, 100 square foot office divided by 1,000 total square feet, that's 10%. So what that means is we will get to take 10% of our actual expenses as a business deduction. All right, and now, so the second step is tracking our expenses, okay? So our home office expenses, you guys, this is not something you're going to track inside of your QuickBooks or your Xero file or whatever bookkeeping you may use, whatever bookkeeping software, okay? It is tracked outside of that. The best way to do it is in a spreadsheet, and I've got one for you. The link to it is in the description, and it'll help you guys track all of the expenses that you need in order to take this actual home office expense deduction. So the expenses that you're going to track in order to take this actual home office deduction include your utilities, which is gas and electric and water. It's your HOA fees. It is your homeowners or your renters insurance. It is the cost for your security systems if you have them, and you pay a monthly fee. It's your internet and your home phone line if you have them. And then it's also your rent if you're a renter, or if you own your house, it's your mortgage interest and what's called depreciation on the value of your home. I do get a lot of questions about depreciation, and I will do a whole nother video on that topic specifically. But what I want you to know for the purposes of this video, all right, is depreciation decreases the cost value of your house, which really only comes into play when you're ready to sell your house. So, number example, you buy a house for $300,000, all right? You take a home office deduction for X amount of years, and in that time, you take $5,000 in depreciation under your home office expense, okay? When you go to sell your house, your cost basis is no longer that $300,000 you spent on the house. It is now $295,000, right? Because you've taken $5,000 of depreciation. And so when you go to sell it, you're going to have a little bit more gain, more income to record, all right? So that is something that a lot of people, it concerns them. They don't want to do it. I highly suggest talking to a tax professional, because while it sounds scary, it's really important to see the numbers behind it and also to understand what it actually means in the long run, okay? Because we get more income, but not necessarily. So topic for another video, but just something I wanted to make sure you guys understood when you're thinking about, when you're weighing in on actual versus standard home office deduction. And it's important to remember that when you take the standard home office deduction, you guys, depreciation isn't a factor. So if that depreciation piece really is something that you're like, no, I want to avoid that. I don't care how much more it saves me on this tax season, on this tax return, I don't want to deal with depreciation, then you're going to want to go with the standard home office deduction. So in the end, standard home office deduction, easier to calculate, easier to track, doesn't depreciate your house, but actual home office deduction can save you a lot more money. It really can be a more tax advantageous method in the current year. So weighing one over the other really does come down to looking at both for your particular tax situation, seeing what the difference is, and then making that decision. One really easy thing to, that helps people make decisions is if you don't want to track all of your expenses, well then you can throw actual out the window. You're going to want to go with the standard. Okay, but again, if you really want to know which one is more advantageous, you got to look at both of them, okay? And that is where your tax software may be able to help you if you self-prepare, or if you have a tax preparer, definitely chat with them about this home office deduction and figure out what your bottom line is for your tax situation. If you guys have any questions about what we talked about today, go ahead and leave a comment below. And then I highly, highly suggest you head on over to our Facebook community, Money, Taxes, and Finance for Small Business, because these topics are what we talk about on a regular basis and have live trainings on every week. You can access that group by clicking the link in the description box. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe, and while you're loving on me hard, go ahead and hit the notification bell so you never miss a future video.